Good afternoon, folks. This afternoon's topic A is time banking when it comes to elderly care. So I'm going to go through that for you today for presentation A. So, shall we dig into presentation A? Here we go. The page highlights an idea gaining renewed attention in aging policy circles. Time banking, a system where people exchange services using hours instead of money, could meaningfully reduce the strain families face as long-term care costs rise. The, the page notes that Dr. Chow Yuyao, faculty director of Penn's in MS in a nonprofit leadership program, uh, co-authored an article in the conversation arguing that time banks can both lighten the burden of elder care and rebuild social connection in communities. How time banks work. Simple mechanics. Time banks convert everyday acts of help into structured, trackable system of mutual support. Currency. Time itself. 1 hour of service earns 1 hour of credit, whether the tasks is driving someone to an appointment or teaching them how to use a smartphone. Exchange, uh, reciprocal, not charitable. Members spend their earned hours to receive help from others, creating a circle of give and take rather than one directional volunteering, record keeping, a shared ledger. A coordinator or digital platform logs hours, matches needs with others with offers, and ensures exchanges remain fair and transparent. This structure turns informal, uh, neighborlessness into dependable resource that families can plan around. Why they could ease elder care. The surrounding page frames time banking as a response to the escalating cost and gaps long-term long-term care, reduced financial pressure. Many elder care needs, companionship, errands, meals, prep, light housekeeping, don't require licensed professionals. Time banks allow families to meet these needs without paying out of pocket. Support for overstretched caregivers. When family caregivers can offload routine tasks, they gain breathing room, lowering burnouts. And improving their ability to manage more complex care. Coverage for in between needs. Time banks fill the space between medical care and complete independence, offering the kind of everyday support that formal systems rarely fund. Flexibility as needs change. As an older adult's ability fluctuates, time credits can be used for different types of help without renegotiating contracts or service plans. In essence, time banks act as a community powered buffer around the formal care system. How they promote connection. The headline emphasizes connection because time banks are built on reciprocity, not charity. Relationships grow through repeated exchanges. Members often interact multiple times, building trust and familiarity. Across generational engagement. Older adults can offer skills, storytelling, tutoring, crafts, knowledge, while receiving help with mobility, technology, or transportation. Reduced isolation, regular visits, shared tasks, and mutual supports counter the loneliness that often accompanies aging. Communities, community identity. Time banks create a sense of belonging by making everyone both a giver and a receiver. This social fabric as important. This social fabric is as important as the practical help. Practical benefits and limitations to consider. Benefits: low cost, adaptable support for daily living, dignity preserving. Older adults contribute their own skills, reinforcing autonomy rather than dependence. Inclusive participation. People of all income levels can join since time, not money, is the currency. Limitations. Not a substitute for clinical care, medical personal care, and safety sensitive tasks still require trained professionals. Coordination challenges. Time banks thrive only when enough members participate and exchanges are well managed. Uneven access. People with limited free time, often working caregivers, may struggle to earn credits, raising equity concerns. Trust and safety. Screening, training, and clear boundaries are essential to protect vulnerable elders. These trade offs matter when integrating time banks into broader aging in place strategies. Implementation and policy levers worth noting. The page hints at broader policy conversation around long term care. Time banks can fit into that landscape when supported intentionally. Local coordination, uh, infrastructure, a part time coordinator, or robust digital platform ensures reliability and reduces administrative function or friction. Partnerships with nonprofits and health systems. These partnerships can help define what task volunteers can safely perform and how time banks complement formal services. Seed funding and municipal support, small grants, community community development funds, or aging services budgets can help time banks reach sustainable scale. Integration with aging in place initiatives. Time banks can be woven into village models, senior centers, or neighborhood based care networks. These levers help transform the concept into functioning community assets. Key takeaway: time banking offers a community driven, low cost way to share the everyday work of elder care while strengthening social bonds. It can't replace professional care, but it can make aging at home more sustainable emotionally, financially, and socially when supported with thoughtful coordination and equity minded design. Okay, guys, I'll be back on with B shortly. Okay, give me a little bit for B, and I'll be back on with that for you. B is the second half of this one, so I'll be back on with that shortly. See everybody in a few for the second half.